Hello and welcome to KYC101. This channel is for those of you who are interested in understanding more about KYC and anti-money laundering processes within banking or the financial industry. A short summary about my background and experiences. I have worked within the AML space for the past 13 years, having worked with various consultancies providing AML advice for 14 Tier 1 banks and financial institutions. I have written for AML procedures which were implemented into various banks, trained over 200 analysts globally, and created various risk assessment tools for AML analysis. As my experiences have mainly been in the UK, these videos will detail UK regulatory requirements which are governed by the Financial Conduct Authority. In today's topic, I'll be covering financial sanctions. Definition of sanctions and embargoes. Sanctions and embargoes are political trade restrictions put in place against target countries with the aim of maintaining or restoring international peace and security. In the financial services industry, the main authorities which enforces sanctions are 1. The United Nations, UN. 2. The European Union, EU. 3. The Office of Foreign Assets Control, OFAC, of USA. 4. Her Majesty's Treasury, HMT, of UK. However, in general each country may have their own individual sanctions list of who they do not wish to trade with. The enforcement of economic and trade sanctions target specific countries, regimes, terrorist groups, international narcotics traffickers, the proliferation of weapons of mass destruction, and other threats. Why impose sanctions? The principal purpose is usually to change the behavior of the targeted countries, regimes, individuals, or groups in a direction which will improve the situation in that country. The ultimate objective of a sanction varies according to the situation. For instance, an arms embargo and a ban on the export of certain items or raw materials could be aimed at supporting a peace process and restricting the financing of weapons by the combatants. Financial sanctions may be enforced with the aim of restricting funds from being used within a certain country. It will drastically impact trade with other global economies, and it will disrupt internal operations within various sectors of the country. Targeted sanctions. All sanctions and embargo regimes are targeted. A targeted restriction is focused on individual people or organizations. Sanctions can also be targeted at a particular industry, such as banning the supply of petroleum and related products. Comprehensive sanctions. In some cases, comprehensive sanctions are put in place against a particular country's regime, where all trades are restricted. Sanctioned countries. Cuba. The United States imposed an arms embargo on Cuba on March 14, 1958 during the armed conflict between rebels led by Fidel Castro and the Fulgencio Batista regime. Iran. In 2006, the UN Security Council imposed sanctions after Iran refused to suspend its uranium enrichment program. US sanctions initially targeted investments in oil, gas, and petrochemicals, exports of refined petroleum products, and business dealings with the Iranian Revolutionary Guard Corps. Sudan. For decades, a civil war was fought between the country's northern and southern areas, costing 1.5 million lives. Since 2003, conflict in the Darfur region has claimed thousands of lives and led to over 2.6 million internally displaced people, according to UN estimates. Russia. International sanctions have been imposed during the Russo-Ukrainian War by a large number of countries, including the United States and the European Union, against Russia and Crimea following the Russian invasion of Ukraine, which began in late February 2014. With the recent 2022 Russian invasion of Ukraine, further enhanced sanctions have been placed on Russia from many international governing bodies. Syria. In 2011, EU and UK have imposed sanctions on Syria as there are concerns about a country's internal repression of its citizens, regional instability and other human rights violations, and concerns about the development of weapons of mass destruction. North Korea, officially known as the Democratic People's Republic of Korea, have been imposed by various countries and international bodies. The current sanctions are largely concerned with North Korea's nuclear weapons program, and were imposed after its first nuclear test in 2006. Sectoral sanctions are imposed for certain individuals or organizations. Example, in response to the crisis in Ukraine during July 2014, the US administration authorized traditional economic sanctions against some Russian and Ukrainian persons. The US government added dozens of Russian and Ukrainian sanctioned entities and individuals to the specially designated Nationals and Blocked Persons List (SDN) list. The aim is to limit certain sectors of the Russian economy from gaining access to US capital and debt markets, as well as US technology and expertise in the energy sector. Who must comply with OFAC regulations? All US persons must comply with OFAC regulations. These include US citizens or permanent residents, irregardless of their physical location. All persons who are physically located in the United States, irregardless of their citizenship. Corporations, partnerships, and all other entities domiciled in the US, including the US branches and offices of non-US banks. The non-US branches of a US bank. In the case of sanctions relating to Cuba and Iran, OFAC also regulates non-US entities that are US-owned or controlled, e.g. non-US subsidiaries of US corporations. Note, the reason the US, OFAC, are a key enforcer of sanctions is mainly due to the US reserve currency. As the US dollar is traded internationally, any financial institution which wishes to trade will have to adhere to any OFAC sanction restrictions. How does an AML analyst process a sanctioned client? The three types of sanctions associations. Client registered in a sanctioned country. Client indirectly owned by an entity in a sanctioned country. An individual who is sanctioned is directly or indirectly associated to our client. Process for sanctions escalations to the internal compliance team. Conduct end-to-end research for any potential sanctions links and also check if there are any associations to the firm's internal client base. Contact the front office team for a full explanation of the type of business they wish to conduct and the purpose of the relationship. The compliance team will need to confirm if they are comfortable with the sanctions risks associated with the client for you to proceed further with the review. Attach the correspondence to the file. Compliance response and special conditions. The compliance team may advise that only certain business is allowed. The client may be allowed to have access to certain products or services which may be restricted. Confirmation of this should also be attached to the client file. The compliance team may advise that the client is hard sanctioned, as they are too much of a risk to the firm. This is an internal terminology which means no business is permitted. Do not onboard as a new client relationship. If there is an existing client, arrangements will need to be made where the account is blocked and the client is off-boarded. The relationship manager and front office team will be notified of the concerns by the compliance team. Confirmation of this should also be attached to the file. What are the implications for financial institutions if sanctions are not correctly identified? Breaches may be considered a criminal offense. Reputational risk, it may be harder to gain new business. Loss of faith in the institution, clients may close their accounts. Substantial fines issued. Possible restrictions of trades. Revoking the banking license. Consolidated sanctions list can be found on the websites of United Nations, UN, European Union, EU, the Office of Foreign Assets Control, OFAC, of the USA, Her Majesty's Treasury, HMT, of UK. These sanctions lists are regularly updated where new sanctions are imposed, or old sanctions have been lifted. As mentioned previously, each country may have their own sanctions list and it's worth checking if they have any additional requirements for a particular country. What is a SAR? SAR stands for Suspicious Activity Report. It is a piece of information which will be used to alert law enforcement that a certain client, customer activity is in some way suspicious and might indicate money laundering or terrorist financing. Reason for suspicion. Submitting a SAR provides law enforcement with valuable information on potential criminality. It also protects you and financial institutions from the risk of laundering the proceeds of crime. When do I raise a SAR request with compliance? As soon as you know or suspect that a person is engaged in money laundering or dealing in criminal property, you must advise local compliance requesting a SAR report be submitted. May I inform a client or customer that I have raised a SAR report? You must not say anything to your client or customer which leads to an investigation being prejudiced. Once you have requested a SAR to be raised, you should remember your obligations not to make any disclosures which might constitute an offense of tipping off. Who does a SAR's report get sent to? The National Crime Agency, NCA, allows the compliance team to electronically file a SAR report in their online system. What does the National Crime Agency do with the information? The agency will review the information provided, and if they deem the funds were derived from criminal activity, they may ask the financial institution to freeze the assets. Other financial institutions may also be notified, and they may freeze the assets linking to the same client. The client, or parties involved, may be arrested, and criminal charges will be brought against them in court. There may be further charges and prison sentences for the criminals found guilty of money laundering or terrorist financing. If you enjoyed the video, please leave a like, subscribe or share my channel with your friends. Press the bell icon to get new video updates, it really means a lot. See you next time.